Hello and welcome to this channel. My name is Peter and we're going to be focusing on the stock market. The S&P 500 has rallied significantly off that recent low a few days ago, and we had a powerful buy signal when the stock market broke back above that resistance level. I'm going to show you the 8-hour chart here. We had a beautiful setup here, a breakout above the downtrend line, back test of that support here at 3864, and then a powerful resumption. So that's what we were looking at on the site with the members on the short market updates that we make. A breakout like this with bullish divergence on the RSI suggests that this is a significant bottom. And so on that type of a move, you can expect a run back up to the all-time highs, which is what happened right now. Right? So that's where we are. We're at all-time highs. And so we need to figure out the next step for our trading strategy. So there's quite a few bullish developments that I want to highlight. I want to first take a look at the MACD on the 8-hour chart. That's getting back above the zero line right here. So that's something that we talked about quite a few times. When it's hovering above the zero line, it's an uptrend right here. So that's an uptrend. But when you're below the zero line, that's a downtrend. So seeing this cross here back into positive territory suggests that we're back in a bullish momentum. We take a look at the daily chart and we're starting to get a crossover here. You can see that's a bullish crossover near the zero line. So we don't care about these crossovers that occur far away from the zero line, but when you're near the zero line, like here, and also you can say like here, these are bullish developments, and you can see in each case they lead to significant rallies over the next few weeks. Right? So is that something that we can expect over the next few weeks? Right? And that's exactly what we're going to talk about in this video. Now, if you're so far enjoying this episode, make sure to help us by hitting that like button as hard as you can. It really helps out our channel and makes our research and effort put into these videos worthwhile. Are we going to see a rally that lasts a few weeks on the S&P 500? And the first thing I want to take a look at is this chart that we've been looking at very closely over the past few weeks, right? We've been at resistance, and this is why our trading bias flipped to neutral. So we were bullish here. So we were bullish in this area as we were emerging out of this consolidation. The markets had worked off the overbought conditions and they were ready to resume higher. But recently we got near that resistance and we got rejected, and now we're coming back in to test that resistance. And it seems with this bullish crossover that's currently happening on the MACD, if this continues, we could see a breakout here above that price channel. And so that's something that we talked about in the last episode. That would correspond to a 1997 type scenario, or even 1996, where you had these big breakouts here above significant resistance. Same thing here, big breakout above significant resistance. So that's incredibly bullish for the next few months on the S&P 500. And if we have that type of move, breakout, backtest, and hold, right? If we hold that level, we'll be looking to enter right here. And right now the momentum does seem like it could have the power to break that resistance. This was a temporary consolidation to work off those overbought conditions. So short-term price action is bullish once we get above 4,000 points, right? At 4,000 points, if we see that, that's incredibly bullish. So trade that how you want, but we're going to be looking for opportunities in this area. There is no rush, right? We do not want to be rushing into positions that we're perhaps going to regret later on. We're still below that resistance. We haven't broken it just yet. So that's technical analysis 101. Do not take long positions just under resistance. Respect the rules that make you profitable in your swing trading. Now I want to take a look at the dollar right now. That's been rejected in a very powerful manner off that 92.5 level that we were looking at. This is a tough level of resistance, and we got rejected, and the dollar is now selling off. So when the dollar sells off, you've got asset classes that go up. So this is why the S&P 500 is going up. This is why gold's going up. for the first time in quite a while, and emerging markets are going up as well. We're going to talk about that in just a second. But this is a very big deal, what's happening right here. Seeing such an impulsive rejection of resistance suggests that we're still in that dollar bear market, that we're not seeing a long-term reversal of the dollar, but we're seeing just a counter trend rally that already got rejected that's about to resume lower. Now, when are we going to know exactly what situation we're in? This is the level to look at, 91 points. If we break back down below here, we're looking for much lower lows on the dollar, and that's going to continue pushing emerging markets higher, and likely the stock market as well. Now, emerging markets have had a powerful dip here recently. That's been a great moment to accumulate some shares on emerging markets. So we're definitely keeping an eye on the dollar. A weak dollar is good for the appreciation of asset classes. So that's the trade to make right now. That's what the trend is: weak dollar and higher stocks, higher commodities, and higher precious metals. So if everything is looking perfect for the stock market, what is the biggest risk for stocks right now? And that's exactly what I'm going to show you right now. We're going to take a look at the bond market. And so I want to first make a quick technical analysis of TLT. So this is the Treasury Bond ETF. We can zoom out on the weekly chart. We have this beautiful price channel capturing these highs here, these lows, and you can see what happened in 2020 during the COVID crisis. You had a breakout, back test, and then you had a fail. So that's called a false breakout, and so we immediately sold off back to the middle of that price channel here. But right now the posture of TLT is extremely oversold. I've put up the RSI. It's on an extremely oversold reading right here, and you can see these readings don't happen all too often. We had one here at the bottom of this correction, one here at the bottom of this correction, same thing here, oversold reading, although this one is more powerful. Again here, same thing, or right here. So these oversold readings do tend to correspond to significant bottoms in the bond market. So if we have a rally in TLT right now, a significant rally in TLT, that's going to put pressure on stocks, right? And why do I say that? I'm going to quickly show you the relationship between treasury bonds and stocks. Put up the S&P 500. You can see they have an almost perfect inverse relationship. All right, when bonds go up, stocks go down. When stocks go up, bonds go down. All right, stocks go up, bonds go down, stocks go down, bonds go up. And I can continue that throughout the entire trend. So a lot of what happens with the stock market right now depends on what happens with the bond market at these levels. So anything is possible, right? We know that nothing is 100% in the markets. If we have a breakdown here, that could fuel much higher highs on the stock market, right? Perhaps we'll have a consolidation, a slight rally, and then a breakdown on TLT. That would also be bullish for the stock market. But if we have a large snapback here, right? It doesn't look like that's happening right now, but it could happen. If we have a large snapback, that is going to put some pressure on the stock market. In fact, I want to show you guys something else. This is a chart from Sentiment Trader. It takes a look at the sentiment on TLT. So how bullish or bearish are investors on the bond market? And this is the indicator. As you can see, you can't make out too much from this indicator, which is why we're going to add a moving average to this indicator, a 50-period moving average. And so that already clarifies the picture pretty well. We can see when the sentiment gets too bearish and when it gets too bullish right here. And so on this chart again, right, similar to what we did with the RSI, you can see right now as we speak, we have that moving average very, very low right here. It's an incredibly low reading on the sentiment of TLT. And so if we can compare that to each reading that was as low as this one, right? We've got one here. We're going to put that red line here. We've got one right there as well. One right here. One right here. So here are all the readings more or less. And you can see each time this green moving average gets to this area, right around here, you do tend to have a significant bottom in the bond market. Now again, nothing is perfect, and you can see right here, you had that low reading, but the sell-off continued in the weeks following that reading, and eventually a few weeks later, it bottomed. So it doesn't mean that we're seeing a bottom right now in bonds, but if you want to be aware of what's happening in the stock market, you need to look at the bond market as well. Now, that's about all I wanted to cover in this episode. If you enjoyed, make sure to drop a like and subscribe to this channel if you haven't already. In the meantime, good luck on your trading and see you next time. Now, if you're interested in finding out more about our investment strategies, our research, our market updates, how we're trading the stock market, crypto market, precious metals, commodities, emerging markets, you can go and check out gameoftrades.net. We have a free trial for the pro version, so you can test out our service with no charge. Now, that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the co-vesting module on Prime XBT. The co-vesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Co-vesting module on Prime XBT. They trade, you profit.